Ladies and gentlemen, I am so excited to announce our final panel of the day. And something funny is happening because we're at a Forex conference, but I just feel like every conversation leads back to crypto and DeFi. So here we are at last to really get down to business and discuss the subject matter, and I'm really excited for it. My name is Rachel McIntosh. I'm a content creator and podcast host at Finance Magnates and Ultimate FinTech. I have an amazing panel of guests that I'm very excited to speak with in just a moment, and I'm going to let them introduce themselves. Here we go. Let's welcome them to the stage. So starting from the other end of the stage, Phil, tell us a little bit about yourself and the work that you do.
Yeah, sure. So my name is Phillip Gillespie. I'm co-CEO of B2C2, one of the largest B2B OTC liquidity provider in the crypto space. So before coming into crypto, I used to manage the FX algorithmic trading out of Goldman Sachs in London. And really, at that time, I never saw myself being in crypto. But even in 2017-18, when I made the transition, institutional retail brokers were interested in someone like us to come in and provide a liquidity. So that's the target market that we focused on. And we built the product and services that you now see in crypto, which is not just about spot, but lots of derivatives and everything else that we're rolling out. And that's it for me.
Hello, I'm Tom Higgins, and I'm CEO and founder of Goldeye Crypto Switch. We have two names because I come from the traditional finance world of FX CFDs, and before that, futures and options. But in the last 3 or 4 years, we've built products in the crypto space, hence our Crypto Switch branding, where we're bringing liquidity from market makers, top exchanges, traditional liquidity providers, bringing it all together and providing that into hedge funds and exchanges and traditional retail brokers, prime of primes, etc.
Hi, good afternoon. My name is Kokila. I'm founder of Karm Legal Consultants. We're a law firm based out of UAE. And what makes us different is that we work only with the emerging tech space. So all our clients are either into the space of launching their token or running a crypto exchange or a DeFi platform or in the gaming space. We also work with a lot of regulators across the region in helping them out drafting policies and regulations around the new technologies. So this is an exciting space for us to be here. And UAE has done tremendous work, which I will be very glad to talk about in my panel today about what's happening in the regulatory space here. Thank you.
Hi, I'm Asaf Naim, CEO of Kirobo. Everyone knows us as the company that invent the undo button that basically allow you to retrieve your money if you made a mistake while you send crypto. However, recently we launched a liquid vault that allow you to create in a decentralized way backup and inheritance in the way that if you lose access to your wallet, you will not lose access to your assets. That's it.
So my name is Mina Louka. I'm the CEO of one of our companies, actually two of our companies in the UK. One is an electronic money institution called Eqwire. Another one is B2B in Pay UK, part of the bigger group B2Broker. We do liquidity, technology, white label solutions for brokers. It's kind of an ecosystem. So our group has been launched in 2014, and the way our founders thought about it is to have a fully comprehensive solution for brokers, for financial institutions, where you will find every solution you need in one place. So we do all the heavy lifting in terms of development, if we talk about crypto, all the integration, and then for any business or any investor who would like to have their own business, just to have an integration with one single API. I'm just taking this example as in to give you an idea what do we do and who we are.
Okay, so I'd like to start this discussion with a big, broad question, and I encourage you all to answer it in any way. The first thing that pops into your mind, I want to hear it. What is the thing that has inspired you the most in the crypto space in the last 12 months? And we'll do the same thing. We'll go down the line. So, Phil, you're on the spot once again.
Yeah, sure. So last 12 months. What's happened is, I think a lot of people hear on the news, institutionalization of the space and so on, right? And I think we've been a huge part of that driving force. But now we're interested in structured products. We're interested in NDFs. So I've spent a lot of time working at JP Morgan and Goldman. All of those counterparties are now coming in. The way they're going to come in is they're going to come in through derivatives. They're going to come in non-deliverable because there's too much issues dealing with spot crypto, transaction monitoring, custody, lots of operational risk. It's very hard for real professional institutions to touch spot. So now comes all the wave of sophisticated investors trading derivatives. And these are not just CFDs and so on. There's going to be structured products, combination of funding and options and so on and so on. That's the main focus that we have. What's interesting, by the way, lots of talk about DeFi, but the fact of the matter is there's quite a bit of yield that you can make in crypto by combining and doing dual currency deposits and more of these structured products. So you're going to start seeing CeFi offering high interest rates in the very near future. It's going to be interesting because until now, people are like, oh, look at DeFi, you get 5%, 10%, so on. But you're going to start seeing retail brokers and other kind of institutions accessing and having this massive yield pickup. What's driving that is structured products. And who's driving that? We are one of the driving forces to push those products out. And the regulators are signing off, so that's an interesting development.
For sure.
Yeah, so I agree with Phil on that on the institutional side. What we've seen is more and more institutional, probably at the slightly lower institutional level, also funds, all getting interested. And we went live with a fund recently, and the amount of inbound interest that we got for providing liquidity from a whole bunch of market makers and exchanges and traditional LPs was extraordinary. And that institutional adoption has really supported the price of say, just looking at Bitcoin, for example. Instead of collapsing completely, it goes down 5% in a bit and then comes back again, and it goes around. But it's given it that support that it needs, and that's really helped all of the markets all the way down to the retail. So the institutional side is the backbone. As it is in most markets, it supports everything.
For me, I would say as much as the institutional investors have now stepped in, as like everybody's pointed out, it's very interesting to see that cryptocurrency or virtual financial assets still playing a large role in what we say the Wild West, and that's the metaverse space. So if the regulators and the investors have caught up to the older players and getting into the whole virtual currency space, we've moved ahead in the technology, and now we've created DeFi, and regulators are now like, okay, how do I regulate this? How do I understand that, what I need to do in this space? And then while we're still deciding on that, in the last 12 months, then we saw how metaverse grew, how play to earn games came in, how we see the use of especially blockchains for a lot of remittance program where we see like millions of people actually getting their money or the transfers done using cryptocurrencies regulated and approved by the legislators. So that's a very interesting space for us to see that constant catch between the regulations and laws and the technology moving leaps and leaps ahead of it. So that's been very interesting for us to see in the last 1 year.
Definitely.
What excites me about in the last 12 months is the shift from CeFi to DeFi. We see 12 months ago it was like 30 billion, now it's 300 billion. And for me, DeFi is what the blockchain meant to be. The ability to create your own rules, to trade what you want to trade and to do whatever you want with your money. And what's amazing about that in the next 12 months or 24 months, the next Binance is out there. The next big thing is on DeFi, it's not on CeFi.
To be honest, what really excites me, coming from a core banking background, and I've seen how the traditional banks, they're always risk averse. They don't like to expand in something new, especially the crypto space. What is really exciting me that all the big players started to get in. So when you think about JP Morgan, even Citibank in America, you will see even from the card scheme, whether MasterCard, Visa. So the whole journey from a financial institution perspective, from a client journey perspective, everyone started to get into the game. And again, as my colleague said, all my colleagues, they mentioned DeFi.
Definitely. So what I'm hearing is that we're kind of reaching a point of convergence. We've got institutional players coming into the space in new ways, real ways. At the same time, there's this huge influx of users with play to earn, with the metaverse, all these sort of ground level things the common theme that I was hearing across the board is regulation. That we're entering a point of a new kind of mass adoption, a new level of mass adoption, and that regulation needs to happen. So I'll throw this out to all of you. What do you think is going to happen, or what needs to happen at this point on the regulatory front for things to move forward in a productive way? And I know that each of you will have different answers, given your different perspectives in the industry.
Yeah, maybe I can, maybe we'll do the whole
Of course, yeah.
right to left again. My perspective on regulation is this. A lot of the regulation has taken place in the East and has gone West. Japan put in a regulation in FSA in 2017. Now the FCA is doing a VASP license. And you can see this transition from Singapore, Japan, so on, all the way to EMEA, UK, and eventually in the US. The issue that I have, well, not an issue, and I have no issues with regulators, but one of the stuff that I think we need to have is consistency. And what I notice is that given that this is a new asset class, all the regulators are approaching the regulation slightly different. And that's a bit of a problem. It's good to have the rules of engagement set. Like if there's no regulation for a large professional institution, you just can't go in because you don't understand what the implications are. But when I look at Japan, for example, they made it to B2C. They didn't even consider B2B. And then you have Singapore who's looking to be pro-crypto, yet they're drawing this weird line. UK, similar story. We're having this issue, where does the FCA really stand? So we really need from the regulators clarity. A thing that's very interesting is right now, if we wire money in our bank account, you guys know that anything above $10,000 gets flagged and all that kind of stuff. The regulations, the rules are in place. Crypto, big question mark. And the thing is, you can see the transaction for the last 20, 30, 40, 50 hops. So what if there was an issue 30, 40 hops before the coins hit you? Is that my responsibility? Is it not? The transaction monitoring piece and all of these things, it's not standardized. And what we really need to do is make sure that the regulators are thinking about this and laying out the framework and making sure that there's a consistency across all the jurisdiction. Otherwise, it makes it very, very difficult. And that's, yeah.
I was wondering whether industry bodies like Crypto UK and equivalents around the world will be able to help that, because they'll be able to bring people together so that you can get consistent regulation. I mean, some of the pure crypto play I've spoken to say they don't want regulation, how wonderful it is, but I don't think they've seen what happened in the retail FX world when you have unscrupulous, unregulated brokers sometimes that can just cause absolute havoc and undermine a market. So I think it is incredibly important to have it there, not just to allow the institutions to play, but also a safe place for retail to trade and play.
I think I have the most to say in this.
Yes, go for it.
I work a lot with the regulations, drafting those, and also working with private players. So let me give you what's happening here in UAE, since all of us are here. So UAE took a very bold stance. In 2017, we came out with ICO regulations from one of our financial regulators, ADGM, and they say, it's an ICO, this is what utility tokens are. And in 2018, they came up with a robust framework about this is crypto assets, this is what you define a security token would be, this is what a payment token utility, and they went through the whole thing. We got more than 350 applications for crypto exchanges to go get a license and regulated. Out of those, only 3 have gone live only in this year. So the regulations and the regulator went through that whole journey, and which would be because first the technology has to come and then the regulations. So when we had internet, that's when cybersecurity regulations came in, because there has to be an issue for the law to tackle it. Interestingly, UAE has been very pro in this space, where initially the regulators said, we'll give you frameworks, we'll give you the licensing models, but we're going to be technology agnostic. We're going to see how you settle in within the existing regulations, and we're just going to make a few changes to it. And that's what globally was done. And over the years, in the last 3-4 years, when the projects increased, when a lot of token issuance companies reached out here, when a lot of DeFi platforms all reached here, you saw constant amendments being done to the regulations. So it, in a way, cannot be consistent. It has to go on as the technology will keep developing. So some of the regulators in Europe have taken an approach of just giving you a framework and giving you 9 principles and saying, you're a blockchain company, follow these principles. Some regulators globally have gone and given you very strict regulations, Singapore, UAE being one of those. And then we've got the United States, which said, okay, go and run the market, and then we will figure out how do we penalize you because you not followed the law. So it's a very interesting space. I agree with you that till we don't have a global uniformity, we will keep going through this whole space of not knowing if it's banned in one place, can I do this, can I not do it? But what is interesting is that most of the regulators have started understanding the problem with not working together. So that's why you saw the MiCA guidelines which came out, FATF came out with the guidelines and frameworks. We are working here with the Arab Monetary Fund in putting guidelines for all the Arab countries together, so they all speak same voice. At least we're coming out with laws and regulations which are going to be consistent. So you see, it's only now, and that is because of a lot of, I would say, open dialogue that the regulators have increased in the last 4 to 5 years. If all of you would remember, if you were in the capital market space or in the banking space, it's not that easy to go up to a central bank or a reserve bank and saying, hey, that's my new product, can you do something for me? It's only in the last half a decade that you've seen that approach globally where you walk into a regulator and saying, that's my new product, I want you to do something for me. Be it a sandbox situation, be it giving me an exemption or doing something to accommodate these new products. So I would say there's a lot for regulators to catch up, but slowly and steadily they are there.
If you look on the money laundering situation on the bank industry, think about it. How many criminals do you have in the company, in the society? 1%? All the other 99% are suffering because of 1%. And if you are a bank, fine, spend $2, $3, $5 million on regulation. The problem with the regulation, with the crypto, that we are not a bank, we are a startup, we are high tech. For example, we have 25 people in the company, 2 of them are lawyers in full time, and I think that we spent about 500,000 USD on regulation only this year. You know, if I look on my country, Israel, for example, companies that actually try to regulate, to enforce the self-regulation, there is only 2 outcomes. The first one, they have regulation, no user, the company dead. The second one, they don't have regulation and they don't have user. So if you try to do that, you basically dead. And the regulation is way, way, way back. Like, think about it. On the bank industry, the regulation is about the process. What do you want to regulate here? The code? The decentralization, the concept, the idea. It's very hard to do that, and today more and more crypto projects are basically faceless. So you can regulate Uniswap because you know they are sitting in Bangkok, but how are you going to regulate PancakeSwap? Who are they? No one knows who are they, and this is the problem with regulation. And by the way, take for United States, for example. If United States would think about become a major player in the crypto industry, and we all agree and we all understand that in 20 years, 10 years, 5 years, you name it, the crypto industry will be the dominate. So all the finance will be over there. So imagine that they are losing the option to rule, to dominate the space, to evolve in country because they don't want to give the option to work smoothly and easy, and I think this is the problem.
Well, to be honest, I'm looking at this particular point in two elements, and please bear with me. I think when we don't have regulations, so if I take the UK FCA, for example, it's not a license per se, it's a registration. So they look at the AML part, you satisfy the AML, you satisfy your transaction monitoring, transaction screening, then you're good to go to do business, although they don't have enough knowledge to approve your registration. So they have a long queue to give a license or to give a registration for companies to operate in the UK. But however, if you think about the unregulated exchanges, the DeFi, the reason why we're having all this, because the centralized system, the centralized financial system is putting some hurdles and obstacles for the financial system to work. So lending, borrowing, insurance, the use of stable coin, all this is away from what is exactly is done in the centralized system.
Yeah, and Tom, earlier today we kind of had a brief conversation about the intersection of traditional finance, centralized finance and decentralized finance, and like how these two forces are starting to work together, but not quite, and not in these uniform ways that we've been talking about with regulation. And of course, part of that is, just the fact that there are so many different kinds of crypto users. There's the institutions, there's these people who are, playing video games and earning smooth love potion in order to feed their kids and families. It is a complex issue, but what I'd like to throw, first to you, Tom, and to all of you, is what are the ways in which you see TradFi and DeFi mixing together, and what's working and what isn't working right now?
Yeah, I mean, this is the sort of story of where we came from. So we developed our aggregation technology, for example, from the TradFi space, and we connected to all the different venues, and almost everybody in FX CFD world uses FIX. So it's a very standardized way of operating. It's a very low barrier to entry. And there's different versions of FIX, but they're all broadly the same. When you go into the crypto world, there's different protocols. They're generally based around WebSockets or REST, but there is no standardization around what's inside those protocols. So everybody has to do something different. So if you want to start providing access to some sort of order management system upstream using a standard protocol like FIX, it's incredibly difficult for them to adapt that to all of the different non-standard protocols that you're seeing in the crypto world. So the crypto world needs something to bring that standardization there. I mean, that's what our technology does now. But I do see what will have to happen is those standard protocols will have to start being offered by the bigger venues. And we started seeing it because for example, we worked with Bitfinex originally. They only offered WebSockets. We helped them develop a fixed protocol because they were very keen to do that. They needed some help to see how it worked from the traditional world. So that's one example where we're seeing that working. Where from the other side, what we've gained from the DeFi world is the speed of processing and everything is amazing. If we wanted to get paid by somewhere far away in the world in dollars, it could take days and days and days. If I want to get paid now in USDT, it's done in seconds. And that speed of processing and that digitization of that asset is actually incredible. And that's really going to change things. That's what we're bringing from that world into the traditional world.
And Mina, also, do you have some thoughts to add to this as well, coming from the payments perspective? What are you seeing that's working well in DeFi as it pertains to TradFi?
Let me give you an example on how, for example, lending would work. Imagine you're buying a house. You're buying a house, you have to have an escrow account in the middle because the buyer and seller, they don't trust each other. The bank doesn't trust you because you pay a down payment of 20%, for example, and the rest is for over 15, 20 years.
Yeah.
The smart contract will solve this. A token representing this property reduce the fact that the trust element that you have to all these people will trust each other. So the trust element is in the token, not in the document, not in your future payment. So you get a token and it works with you. Imagine you are a farmer and you want to insure your land, you want to insure your crops or harvest. You buy the insurance, and with an API and with tabs, you look at the contract, the smart contract says, if in 4 days in the year it's raining, there is floods, and this is how you evidence. It doesn't have human interaction or the bank saying, on the 13th of March, there was a flood. You don't have to evidence it. It's a smart contract. It shows this is where the weather was horrible for the last 4 days. Then the contract is in effect and the farmer is paid. So it makes sure that the system, the trust is not in the people, trust is not in the entity, but in the cryptography or the programming of the smart contract. So I think this is the transition between the Tradify to DeFi between the big organizations.
I think you raise a really interesting point, which is that, I was going to ask about technological innovation and what's the most important technological innovation in crypto. But maybe a better question for you all is not, the technology itself, but how is the technology being applied in these different situations? Like, how does the application of this technology to certain elements of traditional finance, or even outside of the finance world, looking at things like supply chain, identity, the metaverse, everybody's favorite word, What do you think is sort of the most exciting, most intriguing part of the world right now in that regard?
A KYC where you own the KYC. So I put my data in a blockchain and then I give people access to it rather than having to provide my passport and my details multiple times to people that I don't know where it's going. If I own the KYC, I can then provide that to who I want, when I want, in a very controlled way, and I can turn it off when I want to. I think that's a fantastic application of this type of technology.
Yeah, and maybe just to add, I mean, that question is basically asking the utility of crypto. You know,
Yeah.
what is the true utility of crypto? And I think you need to split it up into different kind of segments. You have one side of like emerging markets, right? There are countries where there's capital controls. There are countries where there are serious issues with inflation and so on. And if we are in these countries, 20, 30 years ago, you didn't really have too much of an option. These days, you now have crypto. You have a way of actually exchanging and moving your wealth. I mean, this is a serious thing, and certain parts of the world, it's a serious consideration. Then you have the other side, developed markets. And in developed markets, you have a lot of these like application-based, ingenuity and thinking. So last December, I was on a panel in Las Vegas with Sony executives and Microsoft executives talking about gaming tokens. And these serious companies are now looking at not just the play to earn, but also how do you incentivize developers to create games? Because it takes so long to create games. There's no voting mechanism. They have to keep doing the same games over and over because the investment to create a new game is enormous. And serious companies are now trying to look at ways of integrating crypto to answer these questions. So we haven't even talked about CBDCs. Central bank digital currencies, another massive utility from a government perspective. And all of these different players are engaging to try to find solutions to problems that they have. And they're looking at cryptocurrency and the technology and the development that's being made to try to resolve the problems that they have. And that's going to be the driving force. And it's not going to be one utility. It's several utility from different user bases that we're going to see.
I think what's also very interesting in this whole transition from Tradify getting into CFI, DeFi is also to see the use cases and also the power shift. We see these young teenager millionaires, billionaires with so much of wealth, which isn't a bad thing, but there needs to be a total society shift. There's a shift in culture, there's a shift in the economic sense, there's a shift in defining what wealth and income is. So we're going through this whole transition which is on. And interestingly, blockchain by its very use has given the power back to the commoners or to people like us, where we say that we no longer just products or investors. We're actually now in a space where most of us can be investors. We can be stakeholders. We don't need to understand complex commercial companies law or shareholders agreement to understand what do I own in this project. But it has been simplified to the extent where high school investors are there in it. School dropouts are there and they're investing in it, which has a flip side also, definitely, always there is there. But this is a major shift we see. We see that now when the artists can create their content, they're not just relying on one massive social media company dictating their rules. The power is given back to the people who have their data. This is my data, I control it. This is my ID, I control it. This is my content, I release it. I don't need a middleman to go and take majority of my share from it. This is a huge transition period that all of us are globally seeing.
Yeah, and I think that's a good transition to this next question that I had, which is about culture. The culture both in cryptocurrency and the effect that cryptocurrency is having on culture in a larger sense. You know, for example, in the last year, we saw this big narrative shift from the word crypto itself into Web3, you know, so that there is some kind of greater consciousness evolving in our society about crypto. And also, Kokila, as you said, you know, the sort of redefining of what it means to have wealth, who can access wealth. What are your thoughts about that, all of you? I know you're all coming from different perspectives, so I'm really interested to hear what each of you has to say.
I think it's amazing how young people understand this market now. And I mean, we've got 4 children. Our youngest is 9, and he was asking me about NFTs because he'd heard about them. They were talking about them at school, which is absolutely incredible. And the older children I've got would have no interest in what I was talking about, futures and options. So it's gone down incredibly low. All of our, next one up is 17, she knows all about cryptos, and she asked me whether she should be trading them. I said no. But it's incredible how pervasive it is, how much it's just gone through. And it does worry me, actually, because I'm worried it'll be like the effect of social media, where their young brains cannot cope with the total freedom that social media gives them, and the bad actors in there cause real damage. So there's an awful lot of trouble in teenagers because of social media. And what I'm worried is we won't be able to protect them. With nothing central in there to sort of help protect people, how will that happen? Because it is a real problem that in social media that I worry could occur in this world as well, especially with gaming involved, because that's even more pervasive between them.
I just want to say one thing. It's crypto. I'm 100% convinced it's a new financial asset class. When was the last time we had a new financial asset class? I love history, right? And when you think about the 1600s, when equity market first evolved in Amsterdam, imagine you used to have to go to the kings and queens to ask for funding in order to get your ships so that you can go travel to Americas. Now there were collaborative ways of funding your voyages. And I'm pretty sure back in the 1600s in Amsterdam, people were like, yeah, no more kings and queens and stuff like that as well. And I think what I find in the culture side is that when crypto came out, there's a lot of that, yeah, screw the government, rah, rah, rah. And you see a lot of that in the Twitter space. Maybe in 100, 200 years, just like, what happened with the falls of monarchy in, in the 1600s and so on, right? But right now, for us, and the serious players, we have to focus on building up the infrastructure, building out the products and services, building out the laws and regulations and everything out, right? And, I think when I joined crypto in 2017, I was like, oh my God, I got to go back to Goldman. This is crazy. And it's changed. It's becoming more mature. And that wild stuff on Twitter still gets quite a bit of attention, but it is maturing. And I think that, this must be the evolution of a new asset class every time it happens. And I'm very excited to be a part of this. So
I have 2 young kids. I have a 7-month-old baby and I have a 7-year-old. And when I was looking for books for them, it was very interesting that Amazon suggested that I should buy Blockchain for Babies. So it's a book that you read out to a 7-month-old, and it's very interesting. And Bitcoin for Kids. And I bought it for my kids, and I said, this is the world that you are in. You're gonna one day ask me when you're in your teens, oh mom, there used to be something called a bank? You guys actually used to physically enter? Because when I hear my kids talk about now, or the kids around them, it's all about instant. It's all about, I can do this, I can make this game, I can do coding. And these are all little young toddlers. And earlier, remember when I was growing up, my parents would say, oh, you don't talk about money, you don't worry about it. And now you see like 5 years, 6 years have money-making courses that need to understand what's happening. So all these definitions are completely undergoing a change. And as you rightfully said, the whole digital asset class, again, going back to my 7-year-old, he came back and he said, we have to do a project to talk about when was the first money discovered in this world. So it talked about the 1300, where the concept of shell money, which now you look at is pretty much what we're doing in the cryptocurrency space. So it's very interesting to see this whole evolution happening, and we're fortunate to be part of it. And it's our utmost duty to make sure that we work on the right ecosystem for it. The infrastructure, the principles with which this whole journey has started needs to be there in it. And 2016, 17, when the ICOs came in, the scams came with it. I think a lot of scams were there because not even a token issuer understood what it's going to be in the next 4 years, 5 years. And I'll give an example. I did my whole master's and thesis way back in 2004 on a concept of e-money and electronic contracts. And when I came out of law school, I thought everybody's ready to talk about, hey, we have digital money. We have digital contracts, we have digital signatures, nothing will happen in the physical world. It took me almost 15 years to see that actually coming in the limelight and people discussing it. So it's gonna go through its own cycle.
We can talk about what's happened in Asia, that used to provide thing into the West, and now they start to dominate the market. But I think that if you ask me on the culture thing, so I think that we need to talk about the stuff that no one sees. The amount of US citizens that actually give away the citizenship or even move away to Puerto Rico, or even Israelis that goes and live in Bangkok in order to overcome all the difficulties that the government apply. And I don't know if you guys know, but if you are a US citizen, try to open a bank account in Europe or in any other place. Good luck. It's very difficult, it's very hard, and it's become a nightmare. So I see a lot of people that actually move away from the biggest power nation in the world to a different location in order to participate in the game, and I think it's amazing.
Actually, to add to all my colleagues what they said, if you look at crypto, it's not just, well, to add, it's a brilliant new asset class. But if you think about it, or you see the use of crypto, it's not just an asset class. You can pay with it, so it's a payment tool. You can build on the technology and look at the Web 1, 2, and then 3. The evolution of the web is different. So first, everything was static. It's just like a larger Wikipedia. Yeah. Then moving to interactive credentials, and then moving to a whole different world, which we haven't seen yet, where security, privacy is more, you own your things, no centralization of, well, this company is run by this CEO, I have to trust him, I have to trust this board. No, everything is by the coding, by the cryptography, how was it coded, how the smart contracts are done. Then you trust the system rather than trust people. And that will make things easy because, for example, if you imagine you want to exchange crypto to fiat or the other way around, you have to go through all the way through an exchange, buy the coin, then there is a fee here where you have to pay. Then when you redeem, you have to go back to the bank, another fee. Market is booming, then you decide to go back and buy, then you go through the whole cycle again. But if, for example, if you look at the DeFi, you go back to the stable coin, you do all this through the stable coin. Your fee is minimum, and your turnaround time or turnover and turnaround time of doing this, less time, less fee, better return on investment.
Yeah. Absolutely. So in just a minute, I want to take some questions from the audience, but before then, I want to take it down to a personal level for each of you. Like looking at all the things we talked about today, and then considering what's going to happen in the next 12 to 24 months, I'd like to know how these developments are manifesting specifically in each of your work. What are the things that you are preparing to do at your respective companies and projects and endeavors that are future forward, embracing these things that are coming and changing? Phil.
Yeah, okay. Poor Phil, he doesn't have to go first every time, does he?
Okay.
Well, I mean, 1 year is a very tactical period of time rather than a strategic period of time. It's because we're doing it now. So what it means for us this year is adding lots and lots more market makers into our crypto switch, because we've got huge demand from funds and from retail brokers and prime of primes in the traditional finance space to access that marketplace. Going past that, what really excites me is proper DeFi, where you've got blockchain 3, where you've got transactions occurring in a standardized way across the world, talking to each other. I think that's just a fascinating world.
Yeah, maybe I'll talk about something slightly off. So not 1 to 2 years, but maybe 10 years, okay. Right? What is it going to look like in 2030? And what I can say is that right now, when you think crypto, you think lots of crypto exchanges, right? It's close to 500 crypto exchanges right now in the world. That's a lot. And what I guarantee you is that now that there's institutionalization and there's more people trading crypto, I guarantee you that the proportion of value created from crypto exchanges are going to shift to OTC. A lot of us are FX. FX, 99% OTC, 1% exchange trading. I guarantee you we're moving on that direction. So I think we're going to see massive consolidation and quite a bit of no one's on exchanges here, right? Okay, great. So no one's from crypto exchanges, but we're going to see this consolidation. Lots of these major players are going to be gone. We're going to see this major transition to OTC, and that's good for all of us, I think, because that's going to look a lot more like FX. And we've been spearheading that transition, but we firmly believe that that's going to be the next value creation for the next 10 years.
Thank you.
As we see the market is evolving and more people participate, for example, we talked about metaverse and all this cool stuff. So basically, you will go to stores like Amazon, and it's not like a web; it's like an entire experience. Or think about a Zoom meeting instead of most of the interaction between people are gone now. So all the metaverse, I think it's very excited. But what happens if you lose access to that? Like if it's become your ID, if it's become your way of holding crypto, you have NFTs and your identity, so it's become a huge problem. And all the human errors that are going to be happen will be catastrophic. So this is exactly what we in Kirobo are going to focus on the next 12 to 24 months. Eliminate the option to create human mistakes and to reduce the ability to lose your access. That's
Recently we've started seeing a lot of interest coming from judicial bodies, where we're meeting with the Chief Justice in the judicial departments across the region who want to understand that, firstly, how do smart contracts work, and where do, if there's a dispute, how can the courts now start playing a role in it? It's no longer a debate or that if there's a smart contract, you don't need a lawyer. No, that will still continue. Lawyers will still be there. I will be there. So it's good to see that they have now started adapting and thinking about these things, that how do we get involved in this system? It's no longer saying, oh, it's cryptos or smart contracts, and we as a judicial body will not get into it. That's a very interesting space to watch in the next 4 to 5 years. What DAOs have been able to do to bring in governance models, and now we see what regulators want to get into, saying that, how do I become a part of this whole blockchain platform to be in the transaction to see what's happening? And another interesting projects that we are seeing is where all these assets that we are building in the virtual space, in the end of the day, now we're talking about inheritance. We're talking about what happens to these asset classes. Where does that get covered? There are some exchanges who are offering these solutions. There are some judicial departments that we're talking to who are saying that we have wills, we have inheritance. How do we bring in for these virtual classes? So you see a lot of, in the next 5 to 10 years, where that will be a true amalgamation, where you will see nobody saying that this cannot be done or it's a ban, but saying that how do we get into the system?
Thank you.
In our company, what we've been doing recently, or actually since we started the crypto business in 2017, and since we're looking at the entire holistic view of how we help brokers. If you want to have your own exchange, we help you. If you want to have your own exchange and help you with the liquidity, we also do so. It's a matter of looking at the holistic market need, and we help doing all the heavy lifting, integration with different exchanges. Even we go to Africa, Europe, even normal version, just to accept payment via crypto. So this is just boosting the entire market on having crypto as a way and a mean of payment rather than just an investment.